8,000 homes to 18,800 homes, just about. So that's a huge increase over the 5-year period. The serious default average correlation jumped from 443 to 1,987 houses. And while those numbers have grown, the default percentage this year is around 10.5%, which aligns closer to the national average of borrowers with typically greater assets and stronger credit scores. But the number of foreclosures in that same period grew from just 34 to 127. So when folks go into default, we go through a waterfall of activities to try to get them out of default. So instead of having 1,987 defaults, we have closer to 127. That's actually why Income Lloyd is here, because he knows how this all works and can answer questions about it. We have also seen our refinancing numbers both spike and decline. In 2007, we helped 275 homeowners refinance their mortgages, and that has grown to almost 2,700 houses and homeowners in 2009. By the end of September of this year, we will have helped 816 homeowners to date. So you can see that we notice even here in Newcastle County a lot of the changes that have happened due to the change in the nationwide mortgage issues, housing finance issues. But there's more to be done, because there very definitely are households who are still struggling. Some of the good news is we all know about the $25 billion mortgage settlement that was announced earlier this year. This is the largest settlement in the country, and there is money coming down through lenders, and there's money that came down through the state of Delaware. Many of you probably followed, and I know Matt certainly followed what was going at the state level as it was determined how the money that would come through the Delaware Attorney General would be used. Some of that money used for housing counseling, some used for financial fraud investigation, some going to legal representation for borrowers facing foreclosures, and a good chunk also going to the Delaware Mortgage Assistance Program, again, to help folks who need help to get out of really financial tough times. But there is more to be done, and as I said, there are several proposals before Congress that we wanted to share with you so you are aware of them. This, again, these proposals are part of HUD's broader efforts to identify ways that we can help stabilize homeowners and the housing market. So there are several key activities, 3 key things I wanted to mention. First, there's an effort to remove the final barriers for borrowers under the government agency's guaranteed loans, that's the Fannie and Freddie loans, by improving and expanding the HARP program, which provides refinancing opportunities for families who have been paying their mortgages on time. So this is efforts to help people who are paying on time. The common sense reforms would come at no cost to the taxpayers and would apply to about 12 million borrowers, unlocking competition between banks for borrowers' refinancing business and eliminating fees and appraisal costs. These steps will help increase the number of families who can save about $3,000 a year by being able to take advantage of lower interest rates. This program would build on the success of the HARP program by cutting the red tape, eliminating manual appraisals to determine if borrowers are eligible for refinancing. That takes a lot of time, and it costs about $1,000, so we talked about some of those upfront costs. GSEs would be directed to expand their automated underwriting processes, eliminating a significant barrier that will reduce costs and time for borrowers and for lenders. It would also build on success by increasing competition, so borrowers can get the best possible deal by extending the same streamlined underwriting that's currently enjoyed by the existing lender to the rest of the market and level the playing field, helping unlock the competition between the lenders. It would also extend streamlined refinancing for homeowners to all of the GSE borrowers. Those who have significant equity in their home and present less of a credit risk should benefit fully from all streamlining, including lower fees and fewer barriers. This will allow more borrowers to take advantage of a program that provides low hassle, low cost access to today's low interest rates and make it easier and more automatic for servicers to market and promote the program for all the GSE borrowers. This proposed legislation is Senate Bill 3085, the Responsible Homeowner Refinancing Act, which is sponsored by Senators Menendez and Boxer. Second, offer the same simple, low-cost refinancing opportunities for borrowers whose loans don't happen to be guaranteed by the government, opening up today's low rates to 3 to 4 million more borrowers. Again, this is for borrowers who have been paying their loans on time, but because they don't qualify under any of the other programs, they cannot refinance. This legislation is known as the Expanding Refinancing Opportunities Act, Senate Bill 3047, and is sponsored by Senator Feinstein. So this is extending streamlined refinancing to families who don't have loans already guaranteed by the government. And the third item I wanted to bring to your attention is giving borrowers who are already underwater in their home a hand rebuilding equity more quickly by paying the closing costs of those willing to refinance on a shorter term loan. So many of you might have done like I did a few months ago. I refinanced and I went from a 30-year loan, which would have taken me until not quite 90 years old, to a 15-year loan. And other folks, again, because they can't qualify other programs, just can't tap into lower interest rates and refinance for a shorter term. So this would give borrowers the opportunity to do that. So if you are underwater borrower and you want to move forward to refinance, you would actually have a choice. You can take the benefit of the reduced interest rate in the form of lower monthly payments, a good thing, or you can apply that savings, that monthly savings, to building the equity in your home more quickly. That second course of action would give underwater borrowers the chance to get back above water in 5 years or less. So that's a pretty huge step right there. To encourage borrowers to make the decision to rebuild the equity in their homes, the proposed legislation would cover the closing costs of borrowers who choose this option, which is about a $3,000 benefit on average. This legislation is known as the Rebuilding Equity Act, Senate Bill 2909, and is sponsored by Senator Merkley. And again, another important opportunity for borrowers underwater to start rebuilding the equity in their homes. So those are the programs that I really wanted to bring to your attention. As I said, as I've been having informal conversations around the region, my sense is that a lot of folks in our industry are just not aware that there is real active consideration of those. As I said, HUD and Secretary Donovan really believe that these are, if you will, more arrows in the quiver for helping homeowners get above water, be able to rebuild equity, and for those who are just not able to take advantage of some of the other programs that are out there. So, Mr. Hollis, thank you for giving me the opportunity to share the information.
Thank you so very much for coming.